Thank you very much. Thank you for staying today. And we are going to have a great panel. We discuss regulation of real-world asset tokenization, and I would like to introduce you briefly our panelists, but I would say that that will be part of my first question when we discuss the landscape. Before you answer, please introduce yourself. So we have with us Kevin, Marco, Tran, and Kelvin. And my first question would be, where do we stand actually today? So I come from Switzerland. That's the land of stability. When it comes to support crypto, support tokenization, we have very clear framework. But please tell me from your perspective, your region and involvement of your ecosystem regions. Where do we stand? But let's start with a small introduction.
First, yeah. Hello. Yeah, my name is Kevin. I'm the Chief Business Officer of Gates. Gates is a crypto exchange globally, well, except in Hong Kong. There's a camera in case like Elizabeth's watching. Yeah, except in Hong Kong. What I do is just like talk to important people, matter to Gates, and I just realized that everyone's actually important, so I talk to everyone. We have the strong belief that like regulation is inevitable. I've been licensed in Hong Kong with the SFC before I joined crypto industry for like 15 years already. So I think that would be the trend that we're going for. In very particular for RWA, I think we see a change of the atmosphere in the last couple of months, last 8 months to be exact, because of like a certain jurisdictions change of higher up, so to speak. I think that's great because like we were there already. We have seen these products like a few years ago being banned, being abundant because of regulations. But now like regulators like being more open-minded, more friendly towards us. And we're just like pretty much relaunching all this product that we already know already. We know the concept, we know how it works. So I guess it would be great another 3.5 years for us to go down this route.
Nice. Hi. Thanks. It was the first time that I have a moderator sitting in the middle. Normally, like the moderator sit on the side. I just so yeah, Kevin and myself, I've been in Hong Kong for a while, running a asset managers called My Capital. I'm one of the founding partners in My Capital. We are one of the first few who got licensed by the Hong Kong SFC to actually run a crypto fund. So afterwards, I just recently joined, last year, joined Solomon Securities, which is a Hong Kong SFC licensed broker-dealer and also asset managers as well. We actually focus more not only virtual asset, but we also do distribution for RWA. A few RWA that we have done last year is the China AMC tokenized money market fund, and also the ETF that we have helped them distribute as well. So I guess looking back, you know, as Kevin said, when the regulator is not so friendly to RWA, Hong Kong now is fully open, fully blown by RWA because of mainly we have the stablecoin regulations that have already taken place, and also for RWA. It goes hand in hand with stablecoin as well. So the regulator realized that with the stablecoin, we need the RWA, or else what is the people going to invest with their stablecoin? So now RWA is pretty much very friendly under the regulation, I have to say, at least for the Hong Kong regulation. As long as you are licensed by the SFC, you got the mandate to distribute the RWA and token, you already feel free to do all sorts of marketing around it.
Thank you.
Hi. Thank you for the question. My name is Trần Hưng. I'm from founder of Uquid. I am Vietnamese, but actually I'm living in the UK now. So for the question, your question about the regulator in my local, in UK, in UK they more focusing on the way controlling like money laundering. So the regulator is not really step in the tokenize or something like the tokenize. If you see in Dubai or in Hong Kong, we already have some sandbox already, some step in the regulator for the tokenize. But in UK, I think they more focusing on the finance issue, and they they already have the sandbox for exchange as well. So I think in the future, maybe in next year, maybe they're going to be have a sandbox for the tokenized as well. That's what I expect from my in UK. And from Vietnam, maybe a bit different, but Vietnam maybe quite, if you heard about recently, they more focusing on the fiat and the exchange license. So I hopefully in the future soon they also focus on tokenize and tokenize asset and everything in near future.
Thank you, Kellen.
Tran, are you moving to Ukraine?
No, I mean United Kingdom, not
Oh,
not
okay.
Ukraine. Yes, sorry.
I thought you're going to help resolve the war there. Okay, my name is Kelvin. I'm the general partner for Plutus VC. We are a 200 million venture fund based in Hong Kong and Singapore. So regards to RWA, we invested in 2 projects that's here. One is the Dato Durian, which was just on stage on the panel. Another one is the one right there, next stock, is RWA and Digital Securities Exchange. So jurisdiction-wise, next stock has 2 licenses that is based in Malaysia and Philippines. And Dato Durian is entirely based in Malaysia with a trust foundation in Hong Kong itself to hold the land and so forth. So I see that RWA is the future of all tokenization, for sure. At least, but crypto will be here to stay. Meme coins will never go away, right? That's the casino of the world. That's how I see it. But the end of a lot of air tokens is coming. See, I've been in crypto investment since 2016. And this is exactly what I saw. I've been through 2 of the best bull run, the ICO days and the DeFi summer, which that's where majority of the money was made by my fund itself. So we understand the market very well. But what we are looking at today is that crypto investment, even launchpad investors, the retail investors that invest in launchpad, the minute they get their token, boom, they sell everything itself. Right hand in, left hand out. So people are learning the trade of how VCs make money today and so forth. So retail investors getting more and more understanding how air tokens works and so forth. So it's getting harder and harder for utility tokens to actually make money. But I'm not saying that all, but it's getting very hard for utility tokens actually to even raise funding today itself. Gate can probably testify to it. You guys have a venture arm, which I think Plutus and Gate work quite closely to share deals with my Hong Kong team, at least, right? So I see that the next iteration that is coming up, every jurisdiction will embrace RWA. Why? It's not that RWA is something new. RWA is actually securities of every single assets everywhere in the world. It's an old school product that you take it and digitize it. Basically, it's assets.
I love it. So we have completely different perspective and jurisdictions, not only professional side, but we also have Singapore, Hong Kong, Malaysia, UK, Vietnam, Switzerland, and the global view. And I would like to think together with you now about this approach, fragmentation or globalization. So if we look at regulation right now, we have MiCA coming in Europe, already in place in Europe. We have quite new steps in Hong Kong when it comes to regulation. We have significant movements in US when it comes to restrictions or some enforcement actions. So what is better actually for the future? Where do we actually going? Is it coming towards fragmented jurisdiction approach, where we will have individual regulation everywhere? Or is it better Basel standard kind of way where we can actually globalize the regulation for real world asset tokenization, or if you want, crypto tokenization in general? Because in Switzerland, for example, we have a clear distinction between security, utility, and payment token. And you can operate with any, but you need to follow certain rules. What do you think? I would say let's start with global and then go towards
I'll start first. It's kind of a long answer, so I'll put it into two parts, right? So the first part is we're in a very fortunate position where, like most of the trading pairs that we see are fungibles, right? So in the traditional world, like you can trade HSBC and Tencent only in Hong Kong, maybe HSBC in London, and also AWR, ADR in New York. But like that's like very limited, right? It's like you can't trade anywhere in Japan or in Taiwan. So they have the way to actually segregate your rules. Like so, Hong Kong have a specific rules for the Hong Kong stocks, and like Asia, for example, right? There's like at least like 5 or 6 like country with this like restricted FX as well. So like it's really fragmented, yes. But like in cryptos, like trading Bitcoin versus USDT is the same, right? Everywhere. So like right now, I think the regulators actually realize that if they don't open up the regulations, if they don't make the regulations consistent with the rest of the world, people can go around. Like exchange like us can get license in either in Hong Kong or Japan or Dubai, it doesn't matter for us. So what we see is the trend is the rules become more coherent and more friendly across the region. So this is a good thing. But the second part of the answer is still there are jurisdictions like taking it as an advantage. Not trying to name names here, but like I certainly know some of the regulators in certain regions, they would say, for travel rules, you have to go for a particular vendor that we use, because by the end of the day, we want to take a cut from every transaction for the travel rules. Or like whatever, like even like political advantage of like, oh, I control all the travel rules transactions. So that would become a thing, but that's not like unique to crypto, I think. That's just like everything's related to the financial ecosystem.
All right, so globalization you think is the right approach, but we still have some challenges. What do you think, Marco?
I do agree. I think most of the regulators across the globe have their own mandate. And I think as the market just start going, I think the globalization approach is a bit difficult. If you try to talk to the local regulators, they will have their own, let's say, travel rules, right? They already have their own set of rules, which are, I'm not going to name names as well, that different by other regulators as well. I'm not going to name names, but Hong Kong have specific rules. But I think as we see it, just as Switzerland, I think Hong Kong are taking very similar approach as how the global are doing it. Put stock aside, because I think the stock is a bit outside of the Hong Kong regulators, because the stock market is actually controlled by the Hong Kong EX. So there are different set of rules. If you want to tokenize the stock in Hong Kong, I think it still be much longer. But I think for tokenizations, commodities, for instance, I think it's the distribution and also the rules are pretty clear for commodities. And also for utility tokens, payment token as well, which fall under Hong Kong MA for payment. And then utility tokens, if it's purely infrastructures, I think it's a bit outside of the regulations. But for RWA itself, right, because it's a tokenized, they see it as a tokenized securities. So that will fall under the Security and Futures Commissions in Hong Kong, which will regulate most of the RWA. Most of the RWA actually fall underneath it. And now I think the rules are pretty clear under the Hong Kong regulations already.
Do you think it will be global or local?
I think right now it's local, but eventually, as Kelvin said, I agree, if people are bypassing, I think eventually the global regulators will all together and sit down and say, hey, you cannot try to arbitrage my regulations here, or else I'll put a stop to your regulations, and I will not recognize your regulations in Hong Kong. So I think eventually come together, but I think we are not there yet. We're still trying to grow that pie bigger first until we reach a point that, oh, it become a problem. I think that's not a problem at the moment, because I think this market is still very new. Our Hong Kong VATP, which are the virtual asset exchange, have not listed many RWA yet in Hong Kong. So we have not reached a point that it's going to be a fight between different regulators. We have not reached that point.
Okay, so we have time, but where do we go?
Oh yeah, I think I also agree with Kevin and Marco about the travel rule for apply to global scale. At the moment, we can see in the regulator is different in quite different country, and if you see in the US, the way they approach by the original access, like security, they will apply the law of security for tokenized security. So the way they apply by original access, and different country might be apply the different way, different law into the kind of access they want tokenize. So in global scale, if you apply different country, it will be hard for them to, hard for investor and it hard for the people in other country to can access for that kind of asset. The beauty of the tokenized asset is if you are a people living in Vietnam, you still can buy tokenized security in US, tokenized security in Hong Kong. That's the beauty of tokenization. So if Hong Kong and the US have a different regulation, it will be getting trouble for investor, make them just in what kind of tokenize where they should buy. So in the future, I think the regulator should be make the travel rule or something similar between all the country. Back to in the history, we can heard about when the bubble internet. From every country have a different internet complete bubble, but from the time we got IP, same standard for all country in the world. So internet starting growing quite good from the standard IP standard. I think also in the tokenized asset as well, in the world should be have a same standard for all countries. So everyone should follow that kind of standard. I think it will be the future.
Yeah, I like that. Before, yeah, I like that you came towards travel rule. FS, it is actually one of the global regulations in crypto, implied by FATA and FATF, and then local, supported by local regulations. What do you think, local or global?
Global for sure. So my thoughts about this is slightly different. So we have to separate stock market and RWAs as a securities or has a structured investment product itself. Today, if you form a fund in Cayman, you sell to people all over the world. You are not restricted that I can't sell to Hong Kong people, I can't sell to China people, probably you can't sell to Americans, that's for sure. But if you have a structured investment product, you literally can sell globally. There's no restriction to it, except that what you cannot do is you cannot do an offline event in Hong Kong and promote a non-regulated product by the Hong Kong SFC and so on to the Hong Kong people. You can't do that. But if they found out about my product online or whatever, they can buy my product. So, but another question, just to challenge the status quo, is that does regulators or do investment managers and so on, do we want to promote an air token to the retail market and we don't regulate, anybody can buy any air tokens out there? But please don't buy RWA. The regulators are not going to say that, right? You cannot, they are not out in the market to say that, oh, you can't buy ABC token because that's not backed by anything. But are they going to say that you can't buy XYZ token because it's backed by something?
No, I don't think it's going to be the case. But it is interesting. So reverse solicitation, you think that's the key to avoid cross-border regulation or compliance challenge, let's put it that way. It is actually for security deals, and the real-world asset tokenization comes towards security deals. So now the question is, when we look at this market as global, those platforms, where is this bottleneck for real-world asset tokenization actually become available for public? Is it in regulation, or is it in infrastructure, or is it in marketing, or is it in investments? What do you think? It's a challenging question. Who wants to start?
All right. So My view is definitely not infrastructure. As I said, like the infrastructure is already there, and it's we've been trying to do the same thing for like the last few years already. Like, and RWA is not new, right? We tried to do it last cycle with like whiskey, luxury watches, like a NFT linked to like a real world asset. But that's the thing. Why didn't it like become more scalable, right? And I think I got the answer is that tokenization doesn't actually create additional demand, right? It creates liquidity, it help you to like facilitate to trade something that you don't used to trade. I was just talking to these guys on the backstage. Never in my life that I buy any T-bill. I just don't know how to buy it. Maybe I can just do it in the interactive broker, but I never tried it. But as soon as it's tokenized, if it's available in any like crypto exchange, I would just buy it because it's so easy, right? But it doesn't create a demand, right? If you never actually like T-bill, if you never actually like whiskey, you will not buy it just because it's tokenized. So I think the question is not about like our industry. It's about like when you try to tokenize something, have you actually thought about like the demand of your underlying merge or product or the asset, whether or not there's a demand to scale up?
Can I give a different opinion?
Yeah,
On
please.
that, since I invested in exchange and you come from an exchange. So my viewpoint is the opposite. Why NFT on real assets and all these luxury watches doesn't have the demand? We are marketing to crypto people in the wrong time frame. During the ICO craze, during the DeFi summer, we are talking about 10x, 20x, or minimum of 5x. Who the shit wants 5%? Right? Let's face facts. Nobody wants 5% in the crypto world during the ICO craze and the DeFi summer. I have no interest. People comes to me, whoa, Daytona, Rolex, you know. I say, yeah, how much I make? Maybe in 3 years, 15%. I say, fuck you. Oh, sorry.
Pardon your French.
Okay, but availability of assets, you have an opinion about it, I can see.
Yeah, I think I agree with you in terms of crypto. I think in crypto at the moment, I think I have to say 90% for investment and 10% for technical. So for tokenized, I think about 70% at the moment is for investment and about 30% for technical. Because you say like, all the people coming on because they just want money. They want nothing. They don't want how the beauty of the tokenized. They don't want to see how the process of this asset to be tokenized, how they going to do, and how it will be settlement, the security after they put in money in. All they want tomorrow, they put money in. Tomorrow they want H2, H3, something like that. So I would say about 70% at the moment is still investor, but maybe in the future, it's going to be come down about 40% for investment and 60% the people will be when they more clearly about the regulator and everything getting more clearly. So it will be come down just kind, but currently I think about 70%.
That's why in crypto space we have words like FOMO, HODL.
Yeah.
Why? Because FOMO is like bringing you all guys, come in. You know, you're going to be rich. You're going to definitely be rich. You are definitely going to have 5x.
I see it differently. I think we looking at it from an investment angle. Let's go back. I do agree with Kevin. I think the underlying thing is the most important thing. Let's take for instance, BTC is actually the biggest NFT in the world. Why people love it? It's not what Kevin said, because they see the futures in NFT, the futures in BTC itself. Take for instance, we are talking about RWA today, right? The biggest RWA today is actually the tokenized US dollar, which is stablecoin itself. Why people want stablecoin? There's no yield on stablecoin. I actually lose yield to stablecoin. But why do people still hold on to stablecoin? Because it's actually usable, right? In the Web3 world, I'm happy to pay 2% away to actually get it. But today, looking at this RWA, I think beside the investment return, there's actually the underlying attractiveness that attract the people. I think NFT kind of failed because there's no afterwards, what we're going to do with it, with the NFT that makes it, fail. But if you have other use case that come with stablecoin, come with RWA, or maybe Durian, I can actually eat it, or I can redeem Durian, that's actually a big use case. Take commodities, for instance, right? I think commodities, are changing because of RWA tokenizations. Before we buy precious metal, we actually go to a jewelry store, either we buy it, but right now what I can do is I can buy a token. I can redeem this token anywhere in the world with my commodity tokens. I can redeem real precious metal. That's a very powerful tool in the world. So I think it's the underlying that actually matters to what I wanted to buy.
Can I just add one more point? It's not about regulations, but like it's a very good point. So like that's also why I'm not like a DGen or crypto bros, because I still think 5%, 8% is good. The 12%, 20%, 50%, 5x come with the risk that we don't realize. Like none of us like in this hall realize how much risk that we're exposed to. Even Bitcoins, right? Bitcoins, we think Bitcoin is like, the safest bet, but there's still a lot of risk, right? And if it's not, then some of us in crypto would have won Nobel Prize, because that's break all the modern portfolio theory back in high school. But I guess like RWA provide us so between like Bitcoin and meme coins and all this crazy 50x and stable coins, which is pretty much like nothing, we have like the third options now, which is RWA with like reasonable 2%, 3%, 5%, 7%. So I guess it's just like a choice for everyone.
Yeah, I would like also to step one little tiny step away from the regulation and look at it from perspective of actually whom the regulator is protecting. So who is the audience for real-world asset tokenization? Exactly what you were talking about. We are tokenizing assets, but which assets? For whom? And then we will look at the audience which regulator is trying to protect. Who are those people? And then we will come to the perspective of what kind of regulation does need to be in the field. I would look at it from that perspective. What do you think? Whom are we actually targeting? Crypto people?
Locally, if you look at Hong Kong, right? If you look at Hong Kong, the Hong Kong regulators have the duty to protect the Hong Kong citizens. That's why they always will put up red flag on certain projects that's being marketed in Hong Kong. And they always tell you that this is not a regulated product that SFC has looked at. But they have different classification, if I'm not mistaken, because I think when I studied this in Hong Kong was like 2 years ago. They have different classification. The most mild one is that they just mentioned this is not a Hong Kong regulated product, that we hear that Hong Kong people are buying. And others, they would red flag it really, that they think that this is hiding as non-security, but it's actually a security. And if you have a Hong Kong presence, they actually send people to your office and ask you to come to SFC for a meeting.
All right. What do you think?
So in all jurisdictions, the local authorities have the duty to protect their local citizens.
Yes, but whom do we target? Do we target crypto community or do we target actual other citizens too?
That is the mom and pop.
Exactly.
So just add on is the retail clients. I don't think the regulator want to overprotect people who are like us, who are institutional, right? They're not going to protect asset managers like Marco Lim, who already know
they don't
what
care
is.
Because
they don't want to protect me. They're not here to protect me. They're here to protect the mom and pop who have less expertise in these areas and try to protect them so they don't fall into scam or different type of investment scam. But I think once this market grow bigger and then more legit people are in this place, I think these regulations will eventually be less tight. Right now, they want to protect it because it's overwhelming scam in this area at this moment.
All right.
Well, are we talking local, or we like so regulators work with like a really mysterious way? Is like whenever there's a problem, then they will try to find some regulations to fix it. So I guess like as soon as like I mean like we can tokenize Pokemon cards tomorrow, right? Well, I'm sure someone's tokenized it already. and it's a big demand. Like, I'm definitely not going to supermarket overnight to queue for Pokemon card, but the return is great. But as soon as someone gets scammed, I'm sure like the government will say something about tokenizing Pokemon cards. So I don't think we have so much potential to tokenize everything, as we said like quite earlier. But it's come down to, for a lot of regulators, they just don't have the bandwidth to like protect everyone from everything. So it's, truth be told, like even like Uber, Airbnb, like outside of our industry, whenever there's a problem, they will step in. But before that, I think game's fair for everyone for now.
You are definitely right. They wait for a complaint to come in. If there's nobody complaining, they don't see anything.
You know, I think we are one of those rare panels on regulation which actually favors the regulation. But okay.
Yeah, before I come to this panel, I already spoke with Kevin a few minutes ago. In 2025, a research to tokenize market in US growing, I think, I remember 260%. And I believe 90% come from T-bill and security. So currently, is a tokenized market more for big company, because the product they tokenize is hard, or it not for the T-bill you make like 4% only, but the retail investor now they're looking for like 30%, 50%. So they not keen on this kind of tokenized access at the moment, because they think is T-bill is not enough for them, because like 4%, 2% is not enough. So they want some H2, H3. So they have to jump in crypto. But in the future, I think tokenize, like Kevin said, everything can tokenize, poker card, everything. So when they see poker card tokenize get like jump to H2, H3, the retail investors, they're going to jump in that kind of tokenized asset. But currently, I think the big company is still like dominant in the market, and the most important player in this tokenized market is still the like big investor, a big company.
Thank you. I want to share with you how we work in Switzerland. So I want to use this opportunity right now to ask you a very specific question. I'm not sure you will be thankful for me asking that, but I'm sure it's going to be interesting. In Switzerland, if you have a question, it doesn't matter if it's tax, regulation, security or not security, crypto or not crypto. You go to the authorities and you ask the question. And they tell you if that's correct, the way you think or not. And they don't judge you. They don't come to you with the checks afterwards. They tell you, OK, it's better to do this in this way. So it's a very open and direct approach. Sometimes it takes time. OK, fine. But it does happen. So my question is, out of your experience, using your jurisdiction difference approach, how is the communication with the regulator is built? And I would like to structure it in a way of advice for other startup owners and builders, how to be compliant and build up the startup and build up that communication with the regulator. And let's go out of your experience, I would say.
I think you cannot name the regulator's name again, right?
I am totally. Who's going to start first? I think SFC is great. No, I mean, like, well, like, I'm not even joking. SFC probably started looking into virtual assets back more than 8 years ago. And they start off with nothing. They don't know anything about it. And they talk to everyone, literally everyone in the industry, trying to pick it up. So I think that's great. I mean, like, we're in a very fortunate positions where Hong Kong in particular, the overall overarching support from the government across different branches, like HKMA, the SFC, and the others, like trying to help the industry. That's great. I can see the same for like a lot of jurisdictions in Asia as well. The only thing is they have to look at the optics, right? They can't just go like all in like they sell pandas. Like Hong Kong, I know it's, like Hong Kong is like big on pandas. Like we're selling pandanomics in Hong Kong. But like they can't go like that 100% to like, okay, let's sell crypto because of the optics. But like at the back, I think they like really trying to like make things work in Asia. I know there's a saying, you probably don't like it, in the US, they like invent things. In Asia, they try to make money off of the inventions. And in Europe, they try to regulate it, right? So like at least like in Hong Kong, we see the money flowing, and they're happy with the money flowing by like having all this new stuff coming to them.
Yeah, I think in the beginning, in 2019, when I talked to the Hong Kong regulators, they're like, oh, BTC is still a scam, right? It's not going to happen. It's not going to work. You know, you guys will trade a bit for a few years, but it will die down. But now I think they realize in 2022, they realize, hey, this thing has been around for 10 years' time. It's not going away, which it proved them wrong now with the ETF launching in US and Hong Kong as well. I think now the regulator have turned 180 degrees, more embracing it. If you send email, telephone, just like how you guys do it in Switzerland, they will reply. But it's just sometimes just have to bear in mind with the Hong Kong SFC, they have hundreds of thousands of inquiries every day. Not only for us who are the issuer, but people who are from retail also inquire them as this is a right product, good product. They have been getting a lot of inquiries. So sometimes their bottleneck is because they're getting so much attention that, for people who are getting the license in Hong Kong, besides gay, I can tell you there's 100 of people trying to apply for the Hong Kong VATP, which is the exchange license. Recently, you guys saw the stablecoin license, which are not regulated by Hong Kong SFC, but Hong Kong MA. They got 77 applications, no joke, right? These are not already small companies. These are multinational, huge corporations who come into the queue. And you can see how, if you have a team of 10 people, how you're going to answer like 77 people inquiries, very difficult. So this is already the people who shortlisted. We have way more people who are inquiring about the stablecoin license in Hong Kong. So a lot of people are now inquiring for the asset management license, broker dealer license, exchange license, stablecoin license, and later on in Hong Kong, we're going to have OTC license, custodian license as well. So I think now the regulator is getting overwhelming because if you look at Singapore, they have been partially shutting down their crypto business as well. And China have been shutting down for the longest time. So all the China inquiries who, if they want to do crypto business, they can't do it in China. The only place they can do it is in Hong Kong. So you can imagine the inquiries from the regulator as the whole population of China asking the same regulator in Hong Kong about all this. So sometimes if you send a question to them, they don't respond to you. It's not that they don't pay attention, it's just their queue are very long. Even me sending questions, they don't reply right away. It takes them a few months. It's because they have so many inquiries.
Do you know why Singapore shutting down from crypto-friendly to what is it now? And will Hong Kong face the same thing like what Singapore faced? Few hundred applications, and then nah, we just give you 5 or 10.
Tell us.
Why?
No. I'm asking you guys.
Well, for us, I think, but to be frank, they can't give out few hundreds of stablecoin license. That realize when people try to come to me and for consultation, I ask them, like they already openly said in the governments already to the public that they're not going to issue hundreds of stablecoin license. So forget about having 100 stablecoin license. They're going to issue a few license at the first batch. It's not that they're not opening up, but normally how the licensing regime work for government is they will first get a few license out first. If the few license survived it, with no problem, they will open up. So just like the VATP, at first the Hong Kong VATP license only have 2 exchanges, OSL and HashKey. Now there are 12 exchanges, but if you look at the 12 exchanges, most of them have not gotten a lot of business. So they want to slowly open up. They don't want the business actually to die, because if they granted too many licenses, the competition get very intense and nobody survive in the end.
Speaking of the truth, just like for the record, I like Singapore. Singapore is good. I like China. China is good as well. Switzerland, Vietnam, like everywhere is great. Okay, go on.
I think I need to back the question for your question because I don't think we have enough time now. So come back to the question about the regulation. Firstly, tokenize the asset. In my opinion, tokenize the asset is processing quite easy. But it's not tokenize asset. It's not about the digital thing. Digitalize the asset. It's very easy because now the tool we every people can do it very easy. But the important thing is also they have to worry about is the liquidity and the accessible for global market. So when the regulator come in, it could be the trust. The main important for regulator have to set up for the country or in global scale is build the trust for people. Because when the people trust in this kind of tokenized assets, they will be investing. Otherwise, they think it's not safe or not trust. I don't think they're going to be happy to put money on. So in the future, in my opinion, the regulator will need to be separate between the big company and the small community. For big company, I think we need to set up the regulation with more strict. But for small communities, small access, I think the regulator need to be more relaxed. Like it's like asset in the localized, something like only asset for the localized people. That kind of thing, tokenized asset need to be more relaxed compared with the kind of asset accessible like for global like TB or something like that.
I like this idea. As actually, we don't have much time, so I'll try to be quick. It's actually the Swiss approach. We have all the security licensing under the FINMA, which is like the financial regulation, and the crypto exchanges, like normal token or utility token, you can exchange, buy or sell under the WASP regulation. And WASP regulation is the AML regulation, which is a lightened regulation in Switzerland. So the main regulator is not responsible for that and doesn't really go towards all these thousands of questions. Anyways, that's great. I want to ask you another question. And actually, that's a question for everyone, but I start with you. So we have 5.5 minutes left. And finishing this panel, I would like you to give three advices to startup owners who are thinking about building or already building the startup in real-world asset tokenization space, no matter in which jurisdiction. What would you advise them to do? What would be your advice from investment perspective, startup owner perspective, from perspective of the global exchange or security asset manager? What can you recommend them? And the second question, if we still have time, is where do you see the space in 5 years? Okay, 5, 10.
I'm going to be very, very quick about this one. So I believe that the most important thing in RWA in this phase, not the future phase, at this phase is to have solid projects that have revenues, real business, and real profits to share. That is the most important thing. And then where do I see this in 5 years? RWA tokens will eclipse utility tokens. At least 50% of utility tokens will be switched to RWA. That's the only way to sustain the whole entire market.
That's very positive. All right.
I think my personal advice for every builder in tokenized markets is firstly have to follow the regulation, because we already have regulation in some markets. So first we have to build the trust from investor. Otherwise, when you have product without caring about the regulator, you will be in loss in the future, because that will be huge pay for something you're doing wrong in the future.
Okay, thank you. Where do you see the market in 5 years?
Oh, the market player will be, I believe, will be huge when the retailer market, tokenized for retailer, it will become with the investor from a lot of countries. They can accept, and I think it will be huge.
Okay, thank you. Also positive. I like that.
I think it's quite easy. I do agree what Kevin said, the return and such. Adding on, I think on a lot of the startup on RWA always think about regulation, which is good. But I think a lot of time they spend too much time on the regulations, but not innovative about their technologies, infrastructure, and the business idea. Leave the regulation stuff not for later on, but you can work with partner. There's already thousands of exchanges, who are licensed as well, security house who are licensed as well, and also RWA platform that are licensed. Work with them. Instead of getting your own license, you can actually use your project and work with them together to build a real business. So I think if at the start of the RWA startup, if you think about, getting a license in Hong Kong, getting a license in Switzerland, Finland, Malaysia, or whatever, it's going to be a very tough journey. But why don't you work with someone who already have the license, but looking for products, then you can work with them. So I guess that will be much easier instead of you getting your own license for startup. But the business idea need to be very innovative.
I think the way you said it's license is quite similar, like agency license for money license. I think it's similar, quite similar in UK. When you got a finance money license, you can set agency for like third-party company. So the company have also similar function, similar license like you. They can running their business under that kind of license. That's what exactly I think you say.
Yeah, I think 5 years time, very easily. Most of the stuff right now is very fungible. Fungible asset that is going on. If you look at it, RWA is going to be, first of all, going to be money market, commodities. Durian is also very fungible. But I think later on, we'll see very non-fungible, where the NFT is supposed to be non-fungible, but they're not asset-backed. We'll see like IP, copyrights, stuff like that, that will go on to the tokenization. But right now, I think our technology or distribution are not ready for those yet, but eventually they will come in 5 years' time.
Thank you.
Yeah, well, as the panels about regulations and the questions about founders, I keep it like really high levels, like 3 advice. 1, act at the best interest of your clients. 2nd, act as the best interest of your own company. And 3rd, no one going to jail. No one going to jail. Okay, so like, not yourself, not any of your employees, right? If you don't know what you're doing, whether or not we put anyone into jail, work with a partner, right? Like get someone who know that for sure. I think
But
that's...
Kevin, those that goes to jail or run away from jail are the richest people in crypto.
Well, yeah.
That's not the motivation,
exactly.
guys.
Yeah. So I don't want to be rich and then go into jail. I think that's the 3 principle I work with. And if I have a bonus point for the 4th one, it's just like everyone's, finished the work, going back home happier than they coming back to the office. So that's the bonus.
So
5
30
years
seconds,
future.
5 years.
What? Sorry.
5 years.
5 years.
Where are we in 5 years?
RWA, that's a good question. I guess
Time?
I don't care if it's like everything's on chain or off chain, as long as we have it like everything's on chain, like all the access in crypto, that's fine. Or like all the cryptos with the off-chain system with the traditional finance, that's fine for me as well.
Lovely. I don't think we have anything to add here. Thank you so much. We had such a great perspective.